Hi and welcome to Swissquote's Daily Market Talk. It's Tuesday, May 6th. Gains in the S&P 500 stalled yesterday on the lack of good news from the trade front, and the US dollar remains under pressure as the Fed starts its two-day monetary policy meeting today. That will probably lead to no change in interest rates in the US this week. So we will cover all that and more. But before we do, please keep in mind that opinions are my own and this is not financial advice. So the week kicked off on a positive note for the German stocks. Rheinmetall, for example, which is a defense stock, was the top winner in the DAX index yesterday as the company extended its gains for the fourth consecutive trading session to a record high level, while enthusiasm from investors was much less visible in the US stock markets. The S&P 500 gapped lower at Monday's open, even though the index actually spent most of the session trying to rebound, while the session ended with a 0.64% loss on the index level, on no major news on the trade front, of course, and buying that had been happening on hope to see the trade winds turn around. Well, over the past 9 sessions preceding this Monday is gently losing momentum right now. Still, there are some minor news on the trade front that India, for example, is considering zero tariffs on some sectors, including steel and auto parts. And Donald Trump keeps saying that trade deals will be announced as soon as this week. So we keep waiting for the good news to start coming. In the FX markets, well, the US dollar remains softer across the board. The dollar's rapid sell-off, especially against the Asian peers, was particularly in focus over the past 2 sessions of trading, and the latter raised worries regarding the US dollar's status as a safe haven and a reserve currency. Because it is now said that the Asian countries may be rushing to convert their US dollar denominated export revenues to local currencies. Why? Simply to avoid holding US dollars in an increasingly uncertain trade and geopolitical environment. And that actually makes sense. Taiwan, on the other hand, denied the rumors that were just flowing around of any agreement on the FX front that would let the US dollar depreciate to offer the US companies a better price competitiveness abroad. So as I said before, there is still talk, rumors that some trade deals could be announced as early as this week, in the coming days. But the week actually begins with Donald Trump's latest threat of 100% tariffs on foreign-made fields to say the poor and the dying Hollywood instead of actual trade deals. As such, well, Netflix and Disney, gapped lower at Monday's open, obviously, even though the prices recovered as the session went on. Netflix still ended the day near 2% lower yesterday, and Ford became the latest big US company to warn that the tariffs will hurt. Palantir, on the other hand, which is one of the biggest performers of this year in the S&P 500, stood out from the crowd of worried companies by saying that AI demand is ravenous whirlwind, announced better than expected earnings yesterday after the bell, and raised its full-year revenue forecast. Alas, the results still fell short of analyst expectations, and even Palantir fell more than 9% in the after-hours trading yesterday. So from here, the lack of good news, especially on the trade front, will certainly start discouraging the bulls from extending the latest rally in US stocks. Yet I still firmly believe that optimistic investors out there are still positioning to catch the moment when the potential tariff deals will start popping to trigger a market rebound. They just don't want to miss such rally, and they just don't want to come too late. And that optimism could limit losses if suspense doesn't last long and trade deals really start flowing in. Now, data-wise, the latest ISM services data printed a faster than expected activity expansion in April in the US, but also accelerating price pressures. So that data combined with a relatively strong set of jobs data last month and a better looking Atlanta Fed growth estimate for the second quarter tamed the anticipation of rate cuts in the US, because in fact Atlanta Fed's GDP forecast now points at a 1.1% growth in the second quarter of this year, and that thanks to improvement in trade deficit after imports exploded in the first quarter in the US in anticipation of tariffs and pushed the first quarter growth for the US to the negative territory. So let's see if and by how much the second quarter growth number improves for the US after the initial tariff-led front-loading pushed it to the negative territory. So it's obvious that the Fed will also be willing to wait and see the impact of tariffs on growth and inflation metrics before making its next policy move. As such, this week's monetary policy meeting at the heart of the FOMC is not expected to bring any changes to interest rates in the United States. Activity on Fed funds futures gives almost 99% chance for a no rate cut this week, but traders still expect 3 interest rate cuts from the Fed throughout this year, and the first one could be announced as soon as this summer. It's just that the current data pushes against expectations of a June rate cut. Currently, as the Fed starts its 2-day monetary policy meeting today, a June rate cut is given less than a 30% chance. So the Fed Chair Jerome Powell's post-decision presser will obviously be quite important to assess whether the balance at the heart of the FOMC will be tilting toward a June interest rate cut due to economic troubles due to tariffs, or toward waiting to see the outcome of these tariffs and negotiations and their impact on growth and price pressures. For now, the rebound in the US 2-year yield actually suggests that the market, the investors, are giving more weight to the second option, which is wait and see before cutting the interest rates for the US. So the latest rebound in the US yields obviously helped certainly the US dollar rebound last week, along with hope of some trade deals coming in earlier or sooner rather than later. Yet a reluctant approach from the Fed could further hammer US growth expectations and keep the US dollar under pressure against majors if trade news are not positive. And in this context, the euro dollar remains a bit below the 113 psychological mark. The dollar yen is back below the 144 level, while the Swiss franc couldn't soften, and that despite a softer than expected inflation report from Switzerland yesterday, suggesting that the Swiss National Bank will cut interest rates to 0 when it meets in June. For equities, the stance of the central banks will obviously continue to play in favor or against appetite for their respective markets. And for now, the European equities continue to be in a better position than their US peers because the expectations for the ECB and the Bank of England remain softer than those for the Fed. Earnings season, on the other hand, has been quite strong for the S&P 500 companies, but the good results that we saw there were somehow clouded by downside revisions to companies' earnings forecasts. Analysts, on the other hand, they also lowered their own EPS estimates for the second quarter of this year by a larger margin than average during the month of April. Now, note that FactSet warns that analysts usually reduce their earnings estimates in the first month of a quarter, so there is nothing too unusual there. Last this year's decrease of 2.4% to the EPS estimates was bigger than the past 5-year average of 1.8%. So in simpler words, the S&P 500 gains won't be solidified before more clarity is seen on the trade front, and the US dollar and the big US companies with international businesses will likely continue to suffer from the ongoing trade uncertainties. So this is all for today. I'm İpek Özkardeşkaya, and thank you for joining me, and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below as usual. Follow us on Instagram, on X, on LinkedIn, but also on WhatsApp, Threads, Telegram, and Blue Sky for regular market updates. Subscribe to our YouTube channel for daily market comments, and please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow, and until then, good day trading.